Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 17, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your support is what keeps this channel going. Thank you for your continued support. Alright, so stocks again pushed towards records. QQQ actually hit a new record this week. We're seeing strength in the offensive sectors such as consumer discretionary and technology. And we'll look at healthcare, which also went to new record highs, and I think it's driven by the biotech. So we'll look at those two. Another breakout recently was by copper miners ETF, COPX, and I actually have a trade open for one of the copper miners, Freeport-McMoRan, FCX. So I'll show you that. I went ahead and I closed my NEO trade. Good thing. I'll show you why. Still excellent profit overall, 403%. I am just very happy. Junk debt still signaling uptrend for stocks. We'll look at that. Treasuries kind of just did nothing, but more upside I think is more likely. Dollar is approaching 52-week lows, and this is really helping gold and silver. Alright, so S&P 500, and this is a futures, so you can see that the March collapse is basically starting to roll off the charts already, and it's becoming like a distant memory. As I kept saying, since April we started buying, and we keep looking for buying opportunities. We are not looking to short, we're not looking to find the top. For stocks, finding the top is one of those useless endeavors that I highly discourage, especially new traders from doing. Finding the bottom is another semi-useless endeavor, so don't bother really. Just look for trends, look for opportunities to get on a trend. In this case, the trend is clearly up. Why do I say the trend is clearly up? Well, first of all, let's look at the lines on this chart. So we have green, blue, red, and yellow horizontal lines. What are these lines? So these lines are proprietary trading indicators. They're called Master Charts Trading price action indicators. And you can have them on your chart on TradingView. All you have to do is just go to Master Charts Trading, click on sign up or buy alerts and indicators, and sign up for the indicators. So there they are, trading indicators. They're only $29.95 per month, or you can get it for cheaper if you're doing longer term trades. You can also subscribe to my newsletter, and I send a ton of alerts. I probably monitor about 150 securities each day, so you get at least one alert similar to what happened, for example, here on 29th of April. And why did we decide to buy it here? So these indicators, what they do is they show you support and resistance. They, unlike other products on the markets, they actually show it to you. There's a line there, and you can clearly see that it works really well. The resistance was overcome here on the 29th of April. We see a breakout, nice move higher, couple of opportunities, one more here on the 18th of May, another decent opportunity to get in here on the 15th of June, all successful, all went in your favor. So the support and resistance lines, you can draw them on your chart. These are calculated by mathematical formula, so I'm not just kind of drawing them in by hand. So in this case, S&P 500 is not far off from the record highs. Record highs are about 3380. If we break above that, I think we could go to 4,000 easily. And how do I know? And the way to figure is basically the depth of this pattern from the March 23rd 2020 low to the recent high, and you can just invert it. And yeah, we could easily go to 3,700, maybe even 4,000. But we don't know when, so we don't worry about it. What we do is we just look for opportunities, and I think opportunities are again right now on the upside, not on the downside. So here's a recent trade. I keep showing the same trade, but it just keeps going, so why not? Here's NASDAQ QQQ. Alert was sent here on the 14th of April. It had several opportunities, probably until 4th of May to get in on this, on this trade, and yeah, it went to new records as high as 26, almost 27% profit. So if you got in, congratulations. I personally didn't get into QQQ, but I got into others, other funds, like for S&P 500 and etc. Within QQQ, or rather within the stock market, we see several sectors. So, for example, technology, discretionary, and healthcare, and I'll get to them in a second. So let's look at technology. So technology and discretionary are what are called offensive sectors. In other words, investors or traders, market participants buy these sectors when they think the outlook is pretty bright, and this is called risk-on posture. So in other words, we're seeing buying in the sectors when market participants think that things are generally okay. And I keep getting the same questions: is that isn't it true that there is such and such event? Isn't it true that we have riots, we have COVID-19 related death, there is disorder in the world, there is all kinds of negative events that people think that those negative events are influencing markets, and indeed they are influencing markets, but the reaction that the markets are exhibiting are not necessarily what people normally expect. So, if things in the real world are looking terrible, does that mean the stock market is also going to look terrible? The answer to that is sometimes. And this is another reason why I simply no longer worry about the news, and I only worry about the chart and my lines. So where is support, where is resistance? Is the price above resistance? Is the price below support? So in this case, price is clearly above resistance. Here's XLK, technology breaking out on the 29th of April, going over 19% towards record highs, and it's trading basically next to record highs. Can the stocks collapse? Of course, but if you are trading, that means that you are buying and then you're trailing it higher. So if the stocks collapse, you will exit. This is the important distinction between buying and holding and living through this big drawdowns. I don't do that. I exit near the top. So for example, for this technology trade, XLK, an opportunity to enter was actually a while back. It was back in June of 2019, and it yielded as much as 40% gain. Where would I have exited? I would have exited right there on the 27th of February. Yes, you will lose a little bit, but compared to a huge gain that you just had, and also compared to the avoidance of loss if you didn't sell into March, I think it's a good place to exit. So this is what we usually do. We look for an opportunity to enter, the opportunity, for example, here 29th of April, and then we trail higher. So, and also we can take profits. So we look for a way to avoid losses. You cannot 100% avoid losses, but you can avoid large losses, and you can make sure you lock in your gains. So this is what trading is all about. Make sure to lock in your gains and avoid losses. So many kind of things that are important and many moving parts, and that's why I urge you guys to sign up at Master Charts Trading. I have a lot of training materials, and I am very accessible. People who are signed up with me know that I can reply within minutes, and you will get your money's worth if you sign up. All right, so XLY, consumer discretionary. So consumer discretionary is the kind of things like McDonald's, Disney. So discretionary spending. It's at record highs. So how is that possible? Following a collapse and closures of many restaurants, etc. Again, I don't really worry about it too much. I only look at the chart. Opportunities to buy, not to short. Opportunities to buy were here in April and early May. And, again, it's good for over 19% gain or over 18% gain. So I keep saying the same thing. Yes, there is really bad news in the world. And one thing that you should be doing, you should be protecting yourself and those you love and those around you. It's very important to be you need to take the events, the news around the world, and apply them to your situation. How are you going to survive this epidemic and pandemic, and how are you going to survive this local unrest? So this is what I keep emphasizing. You need to be taking care of yourself and those around you, obviously. So XLY, consumer discretionary at new records. Just trade the chart in front of you, basically. Here's XLV, healthcare, and again, same general principle. We didn't really do anything different. Here's an opportunity to enter back in April, on 8th of April, 9th of April, couple of opportunities, 13th of April here. And it went to new record highs. So XLV is healthcare, and you can argue that yes, healthcare is important to the COVID-19 related economy. But then how would you explain the previous to technology and the consumer discretionary, especially the discretionary? So don't bother. I would just not bother explaining things. Don't try to answer the question why. Answer the question what are you gonna do and how are you gonna do it? What and how. So here XLV healthcare again at record highs. So we're holding it. I would be just trailing it higher. Where do I trail? So I normally take profits around the green line. So in this case, I would have definitely already taken lots of profits or some profits, and then I would have been advancing my stop. I would be at the blue line. My stop would be at the blue line right now. But you can see it's a new record, so it could easily continue higher. So I think the XLV healthcare has been driven at least partially by the biotech, and the strength in biotech is just tremendous. You can see again, last good opportunity to enter was back in April. Mid-April here, 41% gain. So imagine that you bought calls, you bought options, call options here. A 41% gain, let's say it's option expiring next year, like in January, probably would translate in at least 150 to 200% gain for the option. So yeah, this is how much we can easily make, and without thinking, really. You don't really need to think. I keep emphasizing this. Just look at the chart and just follow the lines. You will save so much trouble for yourself. You will save yourself a lot of worry and a lot of fear. Just trust the charts. Next one I wanted to highlight is copper miners, and once again, so we see a drop here into March, and I did nothing. I just kind of stayed out of the market. Back in June, we're like, okay, now we're seeing a breakout, so let's start buying. This is an actual alert, 5th of June and another one on 22nd of June. Nice move higher. So that's another 20% move in your favor. So within the COPX, the copper miners, I was looking at one company and I thought it was acceptable for me. I liked the way the pattern looked. So here's FCX, Freeport McMoran. So very similar. You can see, collapse into March. Again, I'm sitting there doing absolutely nothing, just watching it. And then you can see a breakout. So the breakout occurred on the 5th of June. It was a little bit too far for me to start chasing it, so I just kind of did nothing, waited, and then right there on the 15th of June of this year, I went ahead and I bought calls. Calls are expiring January 2021. I bought them at 87 cents each. So basically it's $87 because you multiply by 100. And the trade didn't do much for a few days, a couple of weeks here, and then finally it broke out. So at this point, I am, around beginning of July, I'm like, okay, this is definitely a successful trade. So at the very least, if the stock at this point collapsed, I would have just closed it at my entry because I advanced my stop to entry. But stock luckily did not collapse. It actually continued. You can see it broke out above the green line. So this is very strong. This is showing good strength. It broke out above the green line here on the 7th of July. I was like, yeah, it's good. I'm going to take some profit. So I went ahead and I sold at $1.44. I bought at 87 cents. So already nice profit. And it's still going higher. You can see, it just keeps going higher. I'm almost 200% up right now. And let's see how much the stock is up. So the stock is up 30%, and you can see the option is just so much stronger, so much better move. So that's one of the reasons why of late I've been trying to trade more options, really. And you can too. You can too do the same thing. All you gotta do is sign up at Master Charts Trading, get your own indicators, or you can just listen to my alerts, get my alerts. So still holding on, trailing higher. I'm at the at my entry, and I have lots of already equity, so because I sold some of the position. Let's see what the price action will be like, because sometimes it just explodes higher, and why sell out prematurely. So an update on this trade for NEO and IO. So once again, back in May, I'm just kind of watching this stock, and I really like the way this pattern unfolded. So it's a flat, I call it flat consolidation. So where just stock is trading more or less flat, and you can see the lines got really close together. So the green and the yellow line in May, for example, here the lines were 156% apart, or whatever, $3. But you can see back in February the lines were like a lot more apart. They were like 220% apart, so they almost halved. So what I call this is also called a trading range narrowing. So in this case, when the trading range becomes narrow, it becomes easier for the price to go to bullish levels. And this is what the price did exactly. I was simply waiting for a close above my support resistance lines. Again, Master Charts Trading price action indicators. You can get them on your chart. So here on 27th of May, I went ahead and I bought calls. I bought $4 calls, basically at the money, at $1.27 each. And I just kind of waited there, a few days later, already I went ahead and I sold a quarter of my position, and it doubled already by then. So it's very interesting, right? How much they can move. Whereas the stock itself moved, 40%, the option doubled. So it's more than, a very strong move. And you can see it just continued higher. You can see it just trails the green line higher. Again, a few weeks later, I'm like, maybe this is a top-in pattern. So I'm like, okay, I'm going to sell another quarter here on the 19th of June. I was actually correct because it kind of continued lower a little bit, but not significant. So I'm holding, at this point, still half of my position. I'm still holding it. But then it just exploded higher. And on the 8th of July, I'm like, maybe this is the top-in pattern. Maybe this is the end. So I went ahead and I sold another quarter, now at 9.75-ish. So you can see it was 9 times the move from the beginning, 9 times the original price. And I'm still holding a quarter. I'm trailing it. But this pattern here on the 13th of July, you can see big tail out of the top. There's a shadow out of the top. So this is selling, and then the stock continued lower. So I'm like, yeah, I think it's done for. And I went ahead and I closed my position here on 15th of July, just a few days ago. I correctly called it because you can see today the actually price dropped more. Overall, I am just floored at the very nice, trade, 403% move in my favor overall because I took profits. Right now, actually, it's kind of trying to bottom here, so let's see what the behavior is like. But yeah, it could easily, continue higher. It just needs to bottom here. So what am I trying to say? Easy. So don't make things hard. Make things easy for yourself. To read price action takes a little bit of practice, and that's why I'm here to help. This type of patterns where you can kind of catch the top, this is more of a experience. So you will learn to catch this with experience, but you don't really need experience to just look at the chart and see, okay, we have a close above the blue line right there on 27th of May. That's all we really need to do. Alright, junk bonds, J and K. So junk bonds are being bought by Federal Reserve. So this is actually helpful, obviously, because we are buying the same thing that Federal Reserve is buying. So in a sense, there is a floor how low the junk bonds can go. I keep saying the same thing, that junk bonds, the mandate of Federal Reserve apparently doesn't include junk bonds, but that did not really stop them from going ahead and buying following this collapse here into March. So overall, junk bonds and stocks correlate highly. In other words, they move generally in the same direction as stocks. So we are buying them, and we're buying them in the same manner as we're buying other securities. Even if they were not really bought by Federal Reserve, we would have been doing the same thing. So opportunity here on the 9th of April, another opportunity 22nd of May, and the latest one here on the 30th of June. We're not doing anything out of the ordinary. We're simply buying the breakout or a pullback towards the blue line. You can find out about this at MasterChartsTrading.com. Treasuries actually have a position I bought on 11th of June at $1.62 here. It already reached my target on the 10th of July. I went ahead and I sold a third of the position, and I'm still holding the rest, and my stop is now at entry. So I have a little bit of profit and I cannot lose. Psychologically, it's very important, and beginners actually underestimate psychology of trading significantly. It's actually very important because people, traders get excited if they're winning, and then they get depressed if they're losing. None of that is great. You should be extremely calm. And again, as I keep saying, I personally, work out, and I do yoga and meditation, and it is so helpful in trading. You really need to be able to control your emotions, and emotions I mean here by elation or anger or frustration, etc. So trading in general is extremely frustrating, and only occasionally you get wins like this. Normally you get like small win, maybe small loss, but I think it's very important for each individual trader to take care of their health and mental health, because you can easily get extremely cranky if you're losing, right? So in this case, TLT Treasuries. So what I did is I already said that, so I'm currently at entry and I cannot lose. This is important psychologically. Alright, let's switch gears to dollar index, Forex rather. So Forex, dollar index DXY, it's not tradable in the United States, but we can trade individual currencies. So a couple of opportunities to short dollar index here, one on the 2nd of June and latest one on the 30th of June, both successful, very nice moves and approaching new lows. So new lows is from the March lows. I think it will break that. See, you can see that it's kind of trying to stop at the yellow line. So these support and resistance lines clearly mean something. Even though I'm not revealing the calculation, you can still use the indicators to your advantage. So this is why I keep saying don't worry about it, you just use them. It's kind of like you don't really need to know exactly how the car works, but you can start it and drive it, right? You don't really need to know exactly how the engine operates, but very easily you can start the car and get from one place to another. So the same way here is for trading. You don't really need to know how this works. All you need to do is just follow it. So the system is quite straightforward. Again, I can explain it if you need more explanations. So dollar index approaching new lows. In other words, dollar is moving lower. By extension, gold XAU USD is moving higher. So nice move, multi-year highs. We're trading at multi-year highs. If dollar continues lower, gold will continue higher. And why is that? So you can see it's XAU over USD. So if the lower part of the equation is getting smaller, the upper part of the equation is pulling this higher. So weakness for dollar is good news for precious metals, and we are trading it. I actually have a position, GLD. So there's my position from the 23rd of March, and I'm still holding it, and it's, let me see, it's up like 17%. So pretty happy about it. Same general principle for silver, XAG USD or SLV. Same thing, SLV. So there's the opportunity on 15th of May. Now we're approaching new record, 16% move in our favor. It's great, and look how easy it is. And it's visually clearly. It's very visual. So if you can look at it, if you can describe it, if you can just follow the lines, that's all you really need. All right, well, we're getting close to the end of the presentation, so I wanted to show again how to get my indicators. So you gotta go to MasterChartsTrading.com, one word, MasterChartsTrading. Click on Buy Alerts and Indicators, and then sign up for one of the services. So right now I have 3 services. I have a newsletter where you will get alerts like this. So for example, if I buy something, or this is an actual alert, sometimes I don't necessarily buy the same security that I'm sending alert about, but this is a function more of a number of positions I can carry. So usually, as much as 20 positions I can carry comfortably. Then it gets a little hairy. So if I have already 20 positions, I'm not going to open anymore. But this is the type of alerts that you will receive if you sign up for the newsletter. Trading indicators, if you're advanced enough to graph, and this is actually a free interface. TradingView.com is free. My indicators you have to pay. So once you pay, I'll open the door for you, and then you can have them on your chart. Once again, free TradingView.com interface, paid indicators from MasterCharts Trading. Ultimate package basically includes both the trading indicators and the newsletter. It's the best value, and it's still an even better value if you buy yearly. It's still on sale. I also have in the pipeline, potentially we may have a scanner where it will show which stocks are breaking above the blue line, for example, or whatever, closing below the red line. It's configurable. So this is in the works still. But if you're interested, let me know, because this could be offered as a beta testing product. So do let me know if you're interested by sending me a message. Alright, that's it for this week's recap. Again, if you have any questions, please send them in. Thank you for watching, and have another great trading week. Bye bye.